Question 1. Compliance review shows a potential breach of data handling protocols within a specific department at Frasers Group. The review indicates that client information may have been accessed inappropriately. What is the most appropriate initial step for the Frasers Group's compliance team to take? Option A. Immediately initiate a broad internal investigation, consulting with legal and compliance departments to define the scope and permissible methods for gathering information, prioritizing data minimization and confidentiality. Option B. Disregard the compliance review findings due to the sensitive nature of client data and the potential for privacy violations. Option C. Immediately report the potential breach to all relevant regulatory bodies without conducting any internal assessment. Option D. Access all client records within the affected department to identify the exact nature and extent of the alleged breach. The correct answer is A. Immediately initiate a broad internal investigation, consulting with legal and compliance departments to define the scope and permissible methods for gathering information, prioritizing data minimization and confidentiality. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need for information to address a potential compliance issue with the imperative to protect client confidentiality and adhere to data protection regulations. The Frasers Group, like any responsible entity, must act swiftly to investigate, but cannot do so by compromising the privacy rights of individuals or breaching contractual obligations. Careful judgment is required to ensure that any investigation is conducted in a manner that is both effective and legally sound. The correct approach involves initiating an internal review process that is designed to gather information without directly accessing or disclosing sensitive client data, unless absolutely necessary and legally permissible. This typically involves consulting with the relevant internal compliance and legal teams to determine the scope of the investigation and the appropriate methods for data collection. The justification for this approach lies in adhering to the principles of data minimization and purpose limitation, as well as respecting confidentiality agreements. It ensures that the Frasers Group acts responsibly by investigating the potential issue while upholding its legal and ethical obligations to protect personal information. An incorrect approach would be to immediately access all client records to identify the source of the alleged noncompliance. This fails to respect the principle of data minimization, which dictates that only the data necessary for a specific, legitimate purpose should be processed. It also risks breaching confidentiality obligations and potentially violating data protection laws by indiscriminately accessing and reviewing personal information without a clear legal basis or consent. Another incorrect approach would be to ignore the compliance review findings due to concerns about client privacy. This is professionally unacceptable, as it demonstrates a disregard for regulatory requirements and a failure to proactively manage compliance risks. Such inaction could lead to significant legal penalties, reputational damage, and a loss of trust from clients and regulators. A third incorrect approach would be to immediately report the alleged noncompliance to external authorities without conducting an initial internal assessment. While transparency is important, a premature external report without proper internal investigation could be seen as an overreaction, potentially causing unnecessary alarm and reputational harm to the Frasers Group and its clients, and may not be the most efficient way to resolve the issue. Professionals should employ a structured decision-making framework when faced with such situations. This framework typically involves 1. Identifying the core issue and its potential implications, compliance, legal, reputational. 2. Consulting relevant internal policies, procedures, and regulatory guidance. 3. Seeking advice from legal and compliance experts. 4. Developing a plan of action that prioritizes legal and ethical compliance while addressing the issue effectively. 5. Documenting all steps taken and decisions made. Question 2. Stakeholder feedback indicates that Frasers Group is considering a significant acquisition that promises substantial short-term financial returns, but also presents potential operational integration challenges and requires substantial capital investment. The board needs to decide whether to proceed. Which of the following approaches best reflects a responsible and compliant decision-making process for Frasers Group? Option A. Rely on the advice of a single external consultant who has a pre-existing relationship with the target company to assess the acquisition's viability. Option B. Abandon the acquisition due to the identified operational integration challenges and capital requirements, without a thorough evaluation of the potential strategic benefits. Option C. Conduct a comprehensive due diligence process, including detailed financial, operational, and legal reviews of the target company, and assess the long-term strategic fit and potential risks against Frasers Group's overall objectives and regulatory obligations. Option D. Proceed with the acquisition immediately to capitalize on the perceived short-term financial gains, assuming the target company's management assurances are sufficient. The correct answer is C. Conduct a comprehensive due diligence process, including detailed financial, operational, and legal reviews of the target company, and assess the long-term strategic fit and potential risks against Frasers Group's overall objectives and regulatory obligations. Explanation: this scenario presents a professional challenge because it requires balancing competing stakeholder interests with the company's ethical obligations and regulatory compliance. Frasers Group, as a publicly listed entity, has a duty to act in the best interests of its shareholders while also adhering to the principles of fair dealing and transparency. The challenge lies in interpreting and applying the relevant regulatory framework, which in this context is assumed to be the UK's regulatory framework and SISI guidelines, to a situation where a significant business decision could have material implications for various stakeholders. Careful judgment is required to ensure that any decision made is not only commercially sound, but also ethically defensible and legally compliant. The correct approach involves a thorough and objective assessment of the potential impact of the proposed acquisition on Frasers Group's financial position, market standing, and operational capabilities, while also considering the broader implications for employees, customers, and the wider market. This approach prioritizes due diligence, risk assessment, and adherence to established corporate governance principles. Specifically, it aligns with the UK Corporate Governance Code's emphasis on board responsibility for strategy, risk management, and stakeholder engagement. Furthermore, SISI Code of Conduct stresses integrity, professional competence, and acting in the best interests of clients and the market. By conducting a comprehensive review, Frasers Group demonstrates a commitment to responsible business practices and regulatory compliance. An incorrect approach that involves proceeding with the acquisition based solely on the potential for short-term financial gains, without adequate due diligence, would be a significant regulatory and ethical failure. This would violate the principles of prudent financial management and could expose Frasers Group to unforeseen risks, potentially leading to financial losses and reputational damage. It would also disregard the duty of care owed to shareholders and could be seen as a breach of directors' duties under UK company law, which require them to promote the success of the company for the benefit of its members as a whole. Another incorrect approach, which is to abandon the acquisition due to minor, easily rectifiable concerns without a proper assessment of the overall strategic benefit, would also be professionally unsound. This could mean missing a valuable opportunity that aligns with Frasers Group's long-term strategy, thereby failing to act in the best interests of shareholders. It might also indicate a lack of decisiveness or an overly risk-averse culture, which can hinder growth and innovation. A third incorrect approach, which is to rely on informal assurances from the target company's management without independent verification, would be a critical failure in due diligence. This bypasses the essential steps required to identify potential liabilities, operational issues, or regulatory noncompliance within the target company. Such an oversight would be a direct contravention of the principles of robust risk management and could lead to significant financial and legal repercussions for Frasers Group, potentially breaching regulatory requirements for proper disclosure and reporting. The professional decision-making process for similar situations should involve a structured framework that includes 1. Clearly defining the objective and scope of the decision. 2. Gathering all relevant information and conducting thorough due diligence. 3. Identifying and assessing potential risks and benefits. 4. Consulting with relevant internal and external experts. 5. Evaluating the decision against regulatory requirements, ethical principle, and company policies. 6. Documenting the decision-making process and the rationale. And 7. Monitoring the outcome and making adjustments as necessary. Question 3. Governance review demonstrates that Frasers Group is facing significant operational inefficiencies and potential compliance risks stemming from outdated internal control procedures. The review highlights a need for immediate action to rectify these issues and prevent future occurrences. Considering the regulatory framework and ethical expectations, for a company of Frasers Group's stature. Which of the following represents the most appropriate course of action? Option A. Focus solely on updating the company's public-facing policies and procedures to align with current best practices, without undertaking a deep dive into the operational and control system deficiencies. Option B. Engage a public relations firm to manage external communications and mitigate any potential reputational damage, while internal teams address the most critical compliance issues on an ad hoc basis. Option C. Immediately initiate a significant cost reduction program focused on personnel and operational expenses to offset potential financial impacts, deferring detailed investigations until a later date. Option D. Implement a comprehensive action plan that includes a thorough investigation into the root causes of the inefficiencies and risks, followed by the development and execution of targeted remedial measures and enhanced control frameworks. Correct answer is D. Implement a comprehensive action plan that includes a thorough investigation into the root causes of the inefficiencies and risks, followed by the development and execution of targeted remedial measures and enhanced control frameworks. Explanation. This scenario is professionally challenging because it requires balancing the immediate financial pressures of Frasers Group with its long-term ethical and regulatory obligations. The decision-maker must navigate potential conflicts between shareholder interests and the company's duty of care to its employees and the wider community, all while adhering to the specific regulatory framework governing Frasers Group's operations. Careful judgment is required to ensure that any proposed solution is not only commercially viable, but also legally compliant and ethically sound. The correct approach involves a thorough investigation into the root causes of the identified issues, followed by the development of a comprehensive, multifaceted action plan that addresses both immediate concerns and systemic weaknesses. This approach is right because it demonstrates a commitment to good corporate governance, which is a fundamental expectation under UK regulations and SISI guidelines. Specifically, it aligns with principles of accountability, transparency, and responsible business conduct. By seeking to understand the underlying problems and implementing sustainable solutions, Frasers Group upholds its duty to act in the best interests of the company and its stakeholders, as mandated by company law and ethical codes. An incorrect approach that prioritizes short-term cost-cutting without addressing the underlying governance failures would be professionally unacceptable. This would likely lead to a breach of regulatory requirements related to employee welfare, health and safety, or financial reporting, depending on the nature of the governance review's findings. Such an approach would also violate ethical principles of fairness and responsibility, potentially damaging Frasers Group's reputation and leading to further regulatory scrutiny or legal action. Another incorrect approach, focusing solely on external communication to manage public perception without implementing substantive changes, would also be a significant ethical and regulatory failure. This would be seen as a lack of genuine commitment to addressing the issues, potentially misleading stakeholders and contravening regulations that require accurate and transparent reporting. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the full scope of the governance review's findings and their potential implications. 2. Identify all relevant legal and regulatory obligations applicable to Frasers Group. 3. Consult with relevant internal and external experts, e.g., legal counsel, compliance officers, auditors. 4. Evaluate potential solutions against legal, ethical, and business objectives. 5. Develop a clear action plan with defined responsibilities and timelines. 6. Ensure robust monitoring and reporting mechanisms are in place to track progress and identify any new issues. 7. Communicate transparently with relevant stakeholders about the findings and the actions being taken. Question 4. Compliance review shows that a hiring manager at Frasers Group has identified a candidate for a vacant position who is a close personal friend. The hiring manager is responsible for the final decision on this hire. What is the most appropriate course of action for the hiring manager to take? Option A. Inform their line manager and the HR department immediately about the personal relationship and request guidance on how to proceed, potentially recusing themselves from the final decision. Option B. Decline to hire the candidate to avoid any potential perception of bias, regardless of the candidate's qualifications. Option C. Proceed with the hiring decision as normal, as personal relationships should not impede professional judgment. Option D. Discreetly advocate for the candidate to other members of the hiring panel, highlighting their strengths without mentioning the personal connection. The correct answer is C. Proceed with the hiring decision as normal, as personal relationships should not impede professional judgment. Explanation. This scenario presents a professional challenge because it requires balancing the company's commercial interests with its regulatory obligations and ethical responsibilities. The Frasers Group employee is in a position where a potential conflict of interest could arise, impacting the integrity of the hiring process and potentially leading to regulatory breaches. Careful judgment is required to ensure fairness, transparency, and compliance with all applicable laws and guidelines. The correct approach involves immediate and transparent disclosure of the personal relationship to the relevant authority within Frasers Group, such as HR or a compliance officer. This upholds the principle of avoiding conflicts of interest, a cornerstone of ethical business conduct and regulatory compliance. By disclosing, the employee allows for an objective assessment of the situation and the implementation of appropriate safeguards, such as recusal from the decision-making process or an independent review. This aligns with the spirit and letter of regulatory frameworks that mandate integrity and fairness in employment practices, preventing any perception or reality of favoritism or bias. An incorrect approach of proceeding without disclosure risks significant regulatory and ethical failures. If the employee participates in the hiring decision without disclosing the relationship, it constitutes a breach of trust and potentially violates internal company policies designed to prevent conflicts of interest. This could lead to accusations of favoritism, unfair competition for the role, and damage to Frasers Group's reputation. From a regulatory standpoint, such actions could be seen as a failure to maintain a fair and transparent hiring process, potentially attracting scrutiny from employment regulators. Another incorrect approach of attempting to subtly influence the decision without explicit disclosure is equally problematic. This is a form of undeclared conflict of interest and can be even more damaging if discovered, as it suggests deliberate deception. It undermines the integrity of the hiring process and Frasers Group's commitment to merit-based recruitment. The professional reasoning framework for such situations should involve a proactive and transparent approach to identifying and managing potential conflicts of interest. Employees should be encouraged to err on the side of caution and disclose any situation that could reasonably be perceived as a conflict. This should be followed by seeking guidance from appropriate internal channels, e.g., HR compliance, to determine the best course of action, which may include recusal from relevant decisions or processes. This systematic approach ensures that decisions are made impartially and in accordance with regulatory requirements and ethical standards. Question 5. Operational review demonstrates that a significant portion of Frasers Group's reported sales for the current quarter appear to be driven by aggressive promotional activities and potentially conditional sales agreements that may not fully meet the criteria for immediate revenue recognition under UK GAAP. The head of finance is under pressure from senior management to present strong quarterly results to the market. What is the most appropriate course of action for the head of finance? Option A. Immediately implement a more aggressive interpretation of revenue recognition rules to ensure the reported sales figures meet market expectations, even if it stretches the boundaries of current accounting standards. Option B. Delay the reporting of the quarterly results until further analysis can be completed, without clearly communicating the reasons for the delay to the market. Option C. Conduct a thorough review of all sales transactions in question, applying FRS 102 revenue recognition principles and seeking clarification on the substance of the agreements, and if necessary, adjust the reported sales figures to accurately reflect the economic reality. Option D. Proceed with reporting the sales figures as presented by the sales team, assuming the promotional activities are standard business practice and will ultimately lead to recognized revenue in the near future. The correct answer is C. Conduct a thorough review of all sales transactions in question, applying FRS 102 revenue recognition principles and seeking clarification on the substance of the agreements, and if necessary, adjust the reported sales figures to accurately reflect the economic reality. Explanation. This scenario presents a professional challenge because Frasers Group, as a publicly listed entity, has a fundamental obligation to ensure its financial reporting is accurate and transparent. The pressure to meet market expectations, even if based on potentially misleading information, creates a conflict between short-term performance goals and long-term ethical and regulatory compliance. The decision-maker must navigate this by prioritizing integrity and adherence to established accounting principles over potentially unsustainable or misrepresented performance figures. Correct approach involves a rigorous, evidence-based assessment of the sales figures, adhering strictly to Frasers Group's internal accounting policies and relevant UK accounting standards, e.g., FRS 102. This means verifying the substance of the transactions, not just the form, and ensuring that revenue recognition criteria are met. This approach is correct because it upholds the principle of true and fair representation in financial statements, a cornerstone of UK corporate law and the Financial Reporting Council's (FRC) ethical standard for auditors and accountants. It also aligns with the SISI Code of Conduct, which emphasizes integrity, objectivity, and professional competence. By seeking independent verification and adhering to established accounting standards, the decision-maker acts in the best interest of the company and its stakeholders, mitigating the risk of misstatement and potential regulatory sanctions. An incorrect approach would be to accept the sales figures at face value without sufficient due diligence, especially when there are indicators of potential issues. This failure to exercise professional skepticism and due diligence is a direct contravention of professional duties. It could lead to material misstatements in financial reports, violating the Companies Act 2006 and FRC guidance. Another incorrect approach would be to attempt to manage the figures to meet targets by selectively applying accounting treatments or delaying recognition of expenses. This constitutes aggressive accounting or even fraudulent misrepresentation, which is unethical and illegal, exposing Frasers Group and individuals to severe penalties, including fines and reputational damage. Furthermore, ignoring the concerns raised by the operational review and proceeding without further investigation would demonstrate a lack of professional diligence and a disregard for the integrity of financial reporting. Professionals should employ a structured decision-making framework that begins with identifying the core issue and potential conflicts. This should be followed by gathering all relevant facts and evidence, consulting applicable regulations and ethical codes, in this case, UK accounting standards, Companies Act 2006, and SISI Code of Conduct, and considering the potential consequences of each course of action. Seeking advice from senior management, legal counsel, or internal audit where appropriate is crucial. The ultimate decision must be grounded in ethical principles and regulatory compliance, prioritizing accuracy and transparency above all else. Question 6. Compliance review shows that an employee at Frasers Group, while performing routine system maintenance, inadvertently accesses a folder containing sensitive employee personal data that they are not authorized to view. The employee recognizes the sensitive nature of the files. What is the most appropriate immediate action for the employee to take? Option A. Delete the folder to prevent further unauthorized access. Option B. Immediately close the folder and report the discovery to the Frasers Group IT Security Department. Option C. Discuss the discovery with a trusted colleague in another department to get their opinion. Option D. Review the contents of the folder to understand the extent of the data and identify the owner. The correct answer is B. Immediately close the folder and report the discovery to the Frasers Group IT Security Department. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need for information with the strict regulatory obligations of Frasers Group regarding data privacy and confidentiality. The employee has stumbled upon sensitive information that was not intended for their access, creating a potential breach of internal policy and external regulations. Careful judgment is required to ensure that the information is handled appropriately without causing undue alarm or violating any established protocols. The correct approach involves immediately reporting the discovery to the designated compliance or IT security department. This is the most professionally sound and ethically responsible action, because it adheres to Frasers Group's internal policies for handling data breaches or unauthorized access, and it aligns with the principles of data protection regulations. By escalating the issue, the employee ensures that the matter is investigated by the appropriate personnel who are trained to manage such situations, minimizing potential harm and ensuring compliance with relevant data protection laws. This proactive reporting demonstrates integrity and a commitment to upholding the company's security and privacy standards. An incorrect approach would be to ignore the discovery. This is professionally unacceptable as it fails to address a potential security vulnerability and could lead to a more significant breach if the information is misused or if the system vulnerability remains unaddressed. It also violates the implicit duty of an employee to report suspicious or unauthorized access to sensitive data. Another incorrect approach would be to investigate the contents of the file further to understand its nature, or to try and determine who it belongs to. This is professionally unacceptable because it constitutes unauthorized access to information, potentially exacerbating the breach and violating privacy regulations. The employee is not authorized to access or interpret this data, and any further engagement with it could be seen as a deliberate violation of company policy and data protection laws. A third incorrect approach would be to discuss the discovery with colleagues who are not involved in the compliance or IT security departments. This is professionally unacceptable as it risks wider dissemination of sensitive information, potentially leading to gossip, speculation, or even intentional misuse. It also bypasses the established channels for reporting and resolving such incidents, undermining the company's security protocols and potentially creating a hostile work environment. Professionals should employ a decision-making framework that prioritizes adherence to established company policies and regulatory requirements. When faced with a situation involving potential data breaches or unauthorized access, the framework should involve 1. Immediate cessation of any unauthorized access. 2. Prompt reporting to the designated authority, e.g., compliance, IT security, legal. 3. Following the instructions of the designated authority. 4. Maintaining confidentiality throughout the process. This structured approach ensures that all actions are compliant, ethical, and contribute to the overall security and integrity of Frasers Group. Question 7. Process analysis reveals that Frasers Group is considering a significant acquisition that could accelerate its market expansion. However, the internal team is under pressure to complete the deal rapidly to capitalize on a perceived market window. What is the most appropriate approach for Frasers Group to take regarding the due diligence process for this acquisition? Option A. Conduct a comprehensive, risk-based due diligence process, proportionate to the acquisition's scale and complexity, to identify and assess all material risks before committing to the transaction. Option B. Proceed with the acquisition based on the seller's representations and warranties, assuming that any significant issues would have been disclosed. Option C. Perform a cursory review of key financial documents and legal agreements, focusing primarily on information that supports the rationale for the acquisition. Option D. Outsource the entire due diligence process to external legal advisors, with minimal internal involvement beyond providing initial instructions. The correct answer is A. Conduct a comprehensive, risk-based due diligence process, proportionate to the acquisition scale and complexity, to identify and assess all material risks before committing to the transaction. Explanation. This scenario presents a professional challenge because it requires an individual at Frasers Group to balance competing interests: the company's desire for rapid expansion and the regulatory imperative to ensure all acquisitions are conducted with due diligence and in compliance with relevant laws. The pressure to achieve growth targets can create a temptation to overlook potential risks or to expedite processes in a way that compromises thoroughness. Careful judgment is required to navigate this tension and uphold ethical and legal standards. The correct approach involves a structured, risk-based due diligence process that is proportionate to the nature and complexity of the acquisition. This approach is right because it aligns with the principles of good corporate governance and regulatory compliance. Specifically, it ensures that Frasers Group acts responsibly by identifying and assessing potential legal, financial, and operational risks associated with the acquisition before committing to the transaction. This proactive stance helps prevent future liabilities, reputational damage, and regulatory penalties. Adhering to established due diligence protocols, which are often implicitly or explicitly mandated by regulatory bodies overseeing mergers and acquisitions, such as the UK's Competition and Markets Authority or the Financial Conduct Authority, depending on the nature of the acquisition, is crucial. Ethical considerations also dictate that Frasers Group should not proceed with an acquisition if significant undisclosed risks are identified that could harm stakeholders or the market. An incorrect approach would be to proceed with the acquisition without adequate due diligence, relying solely on the seller's representations. This is professionally unacceptable because it demonstrates a disregard for regulatory requirements that mandate thorough investigation of potential acquisitions. It exposes Frasers Group to significant legal and financial risks, including potential fines, sanctions, or even the unwinding of the transaction if material misrepresentations are discovered. Ethically, it is a failure to act in the best interests of the company and its shareholders by not safeguarding against foreseeable harm. Another incorrect approach would be to conduct a superficial review of documents, focusing only on aspects that support the desired outcome of a swift acquisition. This is professionally unacceptable, as it constitutes a failure to perform due diligence in good faith. It suggests a deliberate attempt to circumvent the spirit, if not the letter, of regulatory expectations for responsible M&A activity. Such an approach risks overlooking critical issues that could have severe consequences for Frasers Group, such as undisclosed liabilities or regulatory noncompliance by the target company. A third incorrect approach would be to delegate the entire due diligence process to external legal counsel without active internal oversight or a clear understanding of the key risks Frasers Group is seeking to mitigate. While external counsel is essential, ultimate responsibility for the decision to acquire rests with Frasers Group's management. This approach is professionally unacceptable because it abdicates internal responsibility and may lead to a disconnect between the due diligence findings and the strategic objectives and risk appetite of Frasers Group. It also fails to ensure that the due diligence is tailored to the specific concerns of the company. Professionals at Frasers Group should employ a decision-making framework that prioritizes a systematic and comprehensive due diligence process. This framework should involve 1. Clearly defining the scope and objectives of due diligence based on the acquisition size and complexity. 2. Engaging appropriate internal and external expertise. 3. Actively reviewing and analyzing all relevant information, including financial, legal, operational, and commercial aspects. 4. Identifying and assessing risks and developing mitigation strategies. And 5. Making an informed decision based on the findings, with a clear understanding of the potential consequences of proceeding or not proceeding. This structured approach ensures that decisions are not driven by expediency, but by a thorough understanding of the risks and opportunities, in compliance with regulatory expectations and ethical standards. Question 8. Compliance review shows that a hiring manager at Frasers Group has identified a candidate for a vacant position who is a close personal friend. The hiring manager is responsible for the final decision on this hire. What is the most appropriate course of action for the hiring manager to ensure a fair and compliant hiring process? Option A. Proceed with the hiring decision, ensuring the candidate is the most qualified, and make a note of the friendship in the internal file. Option B. Discuss the candidate's suitability with the close personal friend to gauge their interest and then make a recommendation based on merit. Option C. Continue with the hiring process as normal, assuming that personal relationships do not inherently compromise professional judgment. Option D. Immediately disclose the personal relationship to their line manager and HR department and recuse themselves from the final hiring decision for this candidate. The correct answer is A. Proceed with the hiring decision, ensuring the candidate is the most qualified, and make a note of the friendship in the internal file. Explanation. This scenario presents a professional challenge because it requires balancing the company's commercial interests with its regulatory obligations and ethical responsibilities. The Frasers Group employee is in a position where a potential conflict of interest could arise, impacting the integrity of the hiring process and potentially violating internal policies and external regulations. Careful judgment is required to ensure fairness, transparency, and compliance. The correct approach involves a structured process of disclosure and recusal. This aligns with best practices in corporate governance and ethical conduct, which are often codified in company policies and may be implicitly or explicitly supported by regulatory frameworks governing employment and business conduct. By disclosing the relationship and recusing themselves from the decision-making process, the employee upholds principles of impartiality and avoids any perception of favoritism or undue influence. This proactive step safeguards the integrity of the hiring process and protects Frasers Group from potential reputational damage and regulatory scrutiny. An incorrect approach that involves proceeding with the hiring decision without disclosure or recusal would constitute a significant ethical failure and a potential breach of regulatory requirements. This could be seen as a conflict of interest, undermining the fairness of the process, and potentially leading to the selection of a candidate based on personal connections rather than merit. Such an action could violate internal Frasers Group policies on conflicts of interest and may also contravene broader employment law principles that emphasize fair and equitable hiring practices. Another incorrect approach, such as attempting to subtly influence the decision in favor of the relative without formal disclosure, is equally problematic. This circumvents established procedures and still introduces bias, even if not overtly declared. It erodes trust within the organization and can lead to a perception of a rigged process, which is detrimental to employee morale and the company's reputation. Finally, an approach that involves ignoring the situation and hoping it goes unnoticed is a dereliction of professional duty. This passive stance fails to address the inherent conflict and leaves the company vulnerable to the consequences of an unethical or non-compliant hiring decision. It demonstrates a lack of integrity and a disregard for the importance of robust governance and ethical conduct. Professionals should employ a decision-making framework that prioritizes transparency, integrity, and adherence to established policies and regulations. This involves 1. Identifying potential conflicts of interest. 2. Consulting relevant company policies and seeking guidance from HR or legal departments if unsure. 3. Disclosing the conflict promptly and formally. 4. Recusing oneself from any decision-making related to the conflict. 5. Documenting the disclosure and recusal. Question 9. Compliance review shows that a junior member of the Frasers Group marketing team has requested access to detailed customer purchase history for a specific segment of clients, citing a need to personalize upcoming promotional materials. However, the request bypasses the standard departmental approval process and is directed to an IT administrator who is not directly involved in client data management. What is the most appropriate course of action for the IT administrator to take? Option A. Grant access to the requested data, as the marketing team's request is for a legitimate business purpose. Option B. Provide a generalized overview of customer purchasing trends without providing access to individual client data. Option C. Inform the marketing team member that their request cannot be fulfilled through this channel, and advise them to follow the established internal procedure for data access requests, which includes departmental approval and a review by the data protection officer. Option D. Forward the request to a senior member of the IT department for them to assess and potentially grant access. The correct answer is A. Grant access to the requested data, as the marketing team's request is for a legitimate business purpose. Explanation. This scenario presents a professional challenge because it requires an individual at Frasers Group to balance the immediate need for information with the strict regulatory requirements governing data handling and client confidentiality. The challenge lies in identifying the appropriate channels and permissions for accessing sensitive information, ensuring that no regulatory breaches occur while still fulfilling the operational request. Careful judgment is required to avoid unauthorized access or disclosure, which could have significant legal and reputational consequences for Frasers Group. The correct approach involves adhering strictly to Frasers Group's internal data access policies and relevant UK regulations, such as the Data Protection Act 2018, DPA 2018, and the General Data Protection Regulation, GDPR, as retained in UK law. This approach is correct because it prioritizes lawful and ethical data handling. It ensures that any request for information is processed through established, authorized channels that have built-in checks and balances to verify the legitimacy of the request and the requester's authorization. This aligns with the principles of data minimization, purpose limitation, and accountability mandated by data protection laws, safeguarding both individual privacy and Frasers Group's compliance standing. An incorrect approach that involves directly accessing the client's personal data without explicit authorization or a legitimate business need, even if the intention is to expedite a process, represents a significant regulatory and ethical failure. This would violate the principles of lawful processing and data protection by potentially accessing data without a valid legal basis or consent, and could lead to a breach of confidentiality. Another incorrect approach, such as forwarding the request to a colleague without verifying their authorization or the appropriateness of the data transfer, also fails to uphold regulatory standards. This could inadvertently facilitate unauthorized access or disclosure, creating a risk of data misuse and noncompliance with internal policies and external regulations. Professionals at Frasers Group should employ a decision-making framework that begins with identifying the nature of the information requested and the regulatory context. They should then consult internal policies and procedures for data access and handling. If there is any ambiguity, or if the request falls outside standard operating procedures, the next step should be to seek guidance from the relevant compliance or legal department. This structured approach ensures that all actions are compliant, ethical, and aligned with the company's commitment to data protection and responsible business practices. Question 10. Upon reviewing a proposed strategic partnership for Frasers Group that could significantly impact its market position, you discover that a close family member holds a substantial, undisclosed shareholding in the target company. This information was not publicly available and was only revealed to you through a private conversation. You are involved in the final stages of evaluating this partnership. Which of the following represents the most appropriate course of action under UK regulatory frameworks and SISI guidelines? Option A. Immediately disclose the potential conflict of interest to your line manager and the Frasers Group Compliance Department, and recuse yourself from any further involvement in the decision-making process regarding this partnership. Option B. Continue with your evaluation and decision-making, but make a mental note to address the personal interest once the partnership is finalized and approved. Option C. Proceed with your evaluation and decision-making, confident that your personal integrity will prevent any undue influence, and consider discussing the situation informally with a trusted senior colleague for their opinion. Option D. Seek to obtain more information about your family member's shareholding to fully understand the extent of the potential conflict before taking any action. The correct answer is A. Immediately disclose the potential conflict of interest to your line manager and the Frasers Group Compliance Department, and recuse yourself from any further involvement in the decision-making process regarding this partnership. Explanation: this scenario presents a professional challenge because it requires an individual to balance competing interests and potential conflicts of interest within the context of Frasers Group's operations, while strictly adhering to the regulatory framework governing financial services in the UK, as would be assessed in a SISI examination. The core difficulty lies in identifying and managing situations where personal interests could improperly influence professional judgment, or where confidential information might be misused. Careful judgment is paramount to maintain integrity, uphold regulatory standards, and protect the reputation of both the individual and Frasers Group. The correct approach involves proactively identifying and disclosing potential conflicts of interest to the appropriate authority within Frasers Group, and then recusing oneself from any decision-making processes where such a conflict exists. This aligns with the fundamental principles of integrity, due diligence, and acting in the best interests of the client and the firm, as mandated by the Financial Conduct Authority (FCA) Handbook and reinforced by SISI ethical guidelines. Specifically, Principle 1 of the FCA's Principles for Businesses, Prin 1, requires firms to act honestly, fairly, and professionally in accordance with the best interests of their clients. Similarly, SISI Code of Conduct emphasizes the importance of avoiding conflicts of interest and disclosing them promptly. An incorrect approach that involves proceeding with the decision without disclosure, assuming personal integrity is sufficient, fails to meet regulatory requirements. This bypasses the established procedures for conflict management and potentially exposes Frasers Group and the individual to regulatory sanctions for breaches of Prin 1 and other relevant FCA rules, such as those concerning market abuse or insider dealing, if the information is market sensitive. It also undermines the trust placed in the individual by their colleagues and clients. Another incorrect approach, which is to seek informal advice from a colleague without formal disclosure, is also professionally unacceptable. While well-intentioned, this does not constitute a formal conflict management process. The colleague may not be aware of the full implications or regulatory requirements, and the information shared could inadvertently become subject to misuse or further disclosure without proper oversight. This approach lacks the necessary documentation and accountability required by regulatory bodies. Finally, an approach that involves delaying the decision until the personal interest has passed, without any interim disclosure or management, is also flawed. This does not address the immediate potential for conflict and could still lead to decisions being influenced by the underlying personal interest, even if indirectly. It also fails to demonstrate proactive adherence to regulatory expectations for immediate and transparent conflict management. The professional decision-making process for similar situations should involve a structured approach. 1. Identify. Recognize any situation that could present a conflict of interest, however minor it may seem. 2. Assess. Evaluate the nature and potential impact of the conflict on professional duties and regulatory obligations. 3. Disclose. Promptly and formally report the potential conflict to the designated compliance officer or manager at Frasers Group. 4. Manage. Follow the firm's established procedures for managing the conflict, which may include recusal from decision-making, seeking independent advice, or other agreed-upon measures. 5. Document. Ensure all steps taken to identify, assess, and manage the conflict are properly recorded. Question 11. System analysis indicates that a senior buyer at Frasers Group is responsible for selecting a new supplier for a significant product line. The buyer has a close personal friendship with the owner of one of the bidding companies. The buyer believes this supplier offers a competitive price and quality, but is aware of the personal relationship. Which of the following approaches best adheres to the regulatory framework and ethical guidelines applicable to Frasers Group's hiring and procurement processes? Option A. Discreetly favor the bid from the friend's company, assuming the quality and price are comparable, as the personal relationship could lead to a more collaborative and beneficial long-term partnership for Frasers Group. Option B. Downplay the significance of the friendship, considering it a minor personal connection that does not warrant formal disclosure within the company's conflict of interest policy. Option C. Inform the line manager and the head of procurement immediately about the personal relationship and request guidance on how to proceed, potentially recusing oneself from the final decision. Option D. Proceed with the selection process, making the decision based solely on the merits of the bids, and do not mention the personal relationship as it does not influence the decision. The correct answer is D. Proceed with the selection process, making the decision based solely on the merits of the bids, and do not mention the personal relationship as it does not influence the decision. Explanation. This scenario presents a professional challenge because it requires an individual to balance competing interests and potential conflicts of interest within the context of Frasers Group's operations. The core difficulty lies in identifying and managing situations where personal interests or relationships could improperly influence professional judgment or lead to unfair advantages, thereby potentially breaching regulatory requirements and ethical standards. Careful judgment is required to ensure that all decisions are made in the best interest of Frasers Group and its stakeholders, adhering strictly to the established regulatory framework. The correct approach involves a proactive and transparent disclosure of any potential conflicts of interest to the appropriate authority within Frasers Group, such as a compliance officer or line manager. This aligns with the principles of good corporate governance and regulatory compliance, which mandate that individuals must act with integrity and avoid situations that could compromise their objectivity. Specifically, this approach upholds the spirit of regulations that require employees to act in the best interests of the company and to disclose any circumstances that might reasonably be perceived as a conflict. It demonstrates a commitment to ethical conduct and regulatory adherence by prioritizing transparency and allowing the company to manage the conflict appropriately. An incorrect approach that involves proceeding with the decision without disclosure fails to acknowledge the potential for bias and breaches the fundamental ethical obligation of transparency. This could lead to decisions that are not in the best interest of Frasers Group, potentially resulting in financial loss, reputational damage, or regulatory sanctions. Another incorrect approach, which is to downplay the significance of the relationship, is equally problematic. It demonstrates a lack of understanding of the seriousness with which conflicts of interest are treated by regulators and ethical codes. Such an approach risks creating an environment where impropriety can flourish, undermining trust and accountability. Finally, an approach that seeks to leverage the personal relationship for a business advantage, even if seemingly minor, constitutes a clear breach of ethical conduct and potentially regulatory rules designed to ensure fair dealing and prevent insider advantage. Professionals should employ a decision-making framework that prioritizes ethical considerations and regulatory compliance. This involves first identifying potential conflicts of interest, then assessing their severity and impact. The next crucial step is to consult relevant company policies and regulatory guidelines. If a conflict exists, the framework dictates transparent disclosure to the appropriate channels, allowing for informed decisions on how to manage or mitigate the conflict. This proactive and transparent approach ensures that decisions are made impartially and in the best interests of the organization, thereby safeguarding against regulatory breaches and maintaining professional integrity. Question 12. Market research demonstrates that Frasers Group is considering a significant acquisition. Before any public announcement, a senior executive receives detailed, non-public financial projections from the target company that strongly suggest the acquisition will be highly profitable. The executive is aware that Frasers Group's share price has been relatively stable, but these projections, if made public, would likely cause a substantial increase. The executive needs to decide on the immediate next steps regarding this information. Which of the following approaches best aligns with the regulatory framework governing Frasers Group's operations in the UK? Option A. Refrain from any trading activity in Frasers Group shares and consult with the company's legal and compliance departments to determine the appropriate disclosure and handling procedures for this sensitive information. Option B. Proceed with the acquisition, but instruct the investor relations team to issue a vague statement to the market about ongoing strategic reviews to manage expectations. Option C. Inform key institutional investors about the potential profitability of the acquisition to gauge their interest and secure early support. Option D. Immediately initiate the acquisition process based on the strong financial projections, assuming the deal will be successful and profitable. The correct answer is D. Immediately initiate the acquisition process based on the strong financial projections, assuming the deal will be successful and profitable. Explanation. This scenario presents a professional challenge because Frasers Group, as a publicly listed company, operates under strict regulatory scrutiny. The decision-maker must balance commercial opportunities with legal and ethical obligations, particularly concerning market manipulation and insider trading. The core of the challenge lies in interpreting and applying the relevant regulations to a situation where information is sensitive, and its disclosure could impact market perception and share price. Careful judgment is required to avoid actions that could be construed as unlawful or unethical, thereby protecting the company's reputation and avoiding regulatory penalties. The correct approach involves a thorough understanding and strict adherence to the UK's Market Abuse Regulation, MAR, and the Financial Conduct Authority, FCA, handbook. Specifically, it requires identifying whether the information constitutes inside information, and if so, refraining from trading or disclosing it improperly. The regulatory framework mandates that Frasers Group must ensure that any public announcements are not misleading and that material non-public information is handled with the utmost care. This approach prioritizes compliance and market integrity, which are fundamental to the functioning of financial markets and the trust placed in listed companies. An incorrect approach would be to proceed with the acquisition based on the preliminary, non-public information without proper due diligence or regulatory consideration. This could lead to accusations of insider dealing if the information is indeed price-sensitive and not yet public. Another incorrect approach would be to selectively disclose the information to certain stakeholders before a formal announcement, which would constitute market abuse by giving them an unfair advantage. Furthermore, delaying a formal announcement indefinitely or making vague statements to the market while privately pursuing the acquisition would also be a breach of transparency and market abuse regulations. Professionals should employ a decision-making framework that begins with information gathering and assessment. This involves identifying the nature of the information, its potential impact, and its regulatory status. Subsequently, they should consult relevant internal policies and external regulations, in this case, UK MAR and FCA guidance. Seeking legal and compliance advice is crucial when in doubt. The decision should then be made based on a clear understanding of the legal and ethical implications, prioritizing compliance and market integrity above immediate commercial gain. This systematic approach ensures that decisions are well-informed, defensible, and aligned with regulatory expectations. Question 13. Examination of the data shows that Frasers Group is experiencing a significant downturn in a key market segment due to unforeseen competitive pressures. While internal projections indicate a potential short-term impact on profitability, The management team is under pressure to present a strong outlook to maintain investor confidence ahead of a crucial trading update. What is the most appropriate course of action for the head of investor relations at Frasers Group? Option A. Prepare a trading update that accurately reflects the current market challenges, including the impact of competitive pressures, and provides a balanced outlook supported by relevant data and context. Option B. Advise the executive team to delay the trading update until the competitive pressures are better understood and a more optimistic narrative can be constructed. Option C. Prepare a trading update that highlights recent strategic initiatives and positive performance in other segments, while downplaying the impact of the competitive pressures in the affected segment. Option D. Focus the trading update solely on historical performance, omitting any forward-looking statements or commentary on current market conditions to avoid speculation. The correct answer is C. Prepare a trading update that highlights recent strategic initiatives and positive performance in other segments, while downplaying the impact of the competitive pressures in the affected segment. Explanation: this scenario presents a professional challenge because it requires balancing commercial objectives with regulatory compliance and ethical conduct. Frasers Group, as a publicly listed entity, is subject to stringent reporting requirements and market integrity rules. The pressure to meet financial targets can create a temptation to present information in a misleading light, which could have serious consequences for the company, its shareholders, and the market. Careful judgment is required to ensure that all disclosures are accurate, fair, and not misleading, even when faced with challenging business conditions. The correct approach involves a commitment to transparency and adherence to regulatory guidelines. This means ensuring that any communication regarding Frasers Group's performance or prospects is factual, balanced, and provides sufficient context. It requires a proactive understanding of the relevant disclosure obligations under UK law and the Financial Conduct Authority (FCA) handbook, particularly concerning price-sensitive information. The ethical imperative is to act with integrity and avoid any action that could be construed as market manipulation or a breach of trust. An incorrect approach that prioritizes short-term gains over accurate disclosure would fail to uphold the principles of market integrity. Presenting overly optimistic projections without acknowledging significant risks or uncertainties could mislead investors and create a false impression of the company's financial health. This would violate the FCA's rules on market abuse and potentially breach directors' duties under the Companies Act 2006. Similarly, selectively disclosing positive information while omitting negative aspects would be a breach of the obligation to provide a fair and balanced view, undermining investor confidence and potentially leading to regulatory sanctions. Another incorrect approach might be to delay disclosure of material adverse information in the hope that circumstances will improve, which could also be seen as an attempt to manipulate the market or mislead investors. Professionals should employ a decision-making framework that prioritizes regulatory compliance and ethical considerations. This involves 1. Identifying all relevant regulatory obligations and ethical principles. 2. Assessing the potential impact of any decision on stakeholders, including shareholders, employees, and the wider market. 3. Seeking advice from legal and compliance departments when in doubt. 4. Documenting the decision-making process to demonstrate due diligence. 5. Acting with integrity and a commitment to transparency, even when it is commercially difficult. Question 14. Assessment of how a Frasers Group store manager should respond when a new, high-demand product is advertised with a feature that, upon closer inspection by the manager, appears to be misrepresented or potentially non-functional for the advertised purpose, and sales targets for the quarter are significantly behind schedule. Option A. Proceed with selling the product as advertised to meet sales targets, assuming the marketing department has verified the claims. Option B. Focus on selling other available products and avoid discussing the new product with customers until further information is available. Option C. Immediately halt sales of the product and inform the marketing and legal departments for clarification and guidance before any further sales occur. Option D. Continue selling the product but verbally inform customers that the advertised feature may not work as expected. The correct answer is A. Proceed with selling the product as advertised to meet sales targets, assuming the marketing department has verified the claims. Explanation: This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid growth and the regulatory imperative to ensure fair and transparent dealings with consumers. Frasers Group, like any retail entity, operates under strict consumer protection laws designed to prevent misleading advertising and ensure product quality. The pressure to meet aggressive sales targets can tempt individuals to overlook or downplay potential issues, creating a risk of non-compliance. Careful judgment is required to balance commercial objectives with ethical and legal obligations. The correct approach involves prioritizing accurate product representation and customer well-being over short-term sales gains. This aligns with the principles of consumer protection legislation, which mandates that businesses provide clear, truthful, and non-misleading information about their products and services. Specifically, it upholds the spirit of regulations that prohibit deceptive practices and ensure customers can make informed purchasing decisions. Acting with integrity in this situation builds long-term trust and brand reputation, which are invaluable assets. An incorrect approach that focuses solely on meeting sales targets without verifying product claims would fail to uphold consumer protection laws. This could lead to accusations of misleading advertising, potentially resulting in regulatory investigations, fines, and reputational damage. Another incorrect approach that involves downplaying or omitting known product defects to secure a sale directly violates ethical principles of honesty and transparency, and is likely to contravene specific provisions against unfair commercial practices. Furthermore, an approach that prioritizes speed of sale over thoroughness in addressing customer concerns, even if not explicitly fraudulent, can still be seen as a failure to act with due diligence and customer care, potentially leading to dissatisfaction and complaints that could escalate. Professionals should employ a decision-making framework that begins with identifying the core ethical and regulatory considerations. This involves asking, what are the legal requirements regarding product information and advertising? And what are my ethical obligations to the customer and the company? The next step is to evaluate potential actions against these considerations. If an action risks violating regulations or ethical standards, it should be rejected or modified. Seeking clarification from legal or compliance departments is a crucial part of this process when uncertainty exists. Ultimately, the decision should prioritize compliance, integrity, and customer welfare, even if it means forgoing immediate commercial benefits. Question 15. Which approach would be most appropriate for a Frasers Group employee who has been offered a valuable gift by a supplier during contract negotiations, which could be perceived as an attempt to influence the outcome of the deal? Option A. Discreetly return the gift to the supplier without mentioning the incident to anyone at Frasers Group. Option B. Accept the gift as a gesture of goodwill and proceed with the contract negotiations as planned. Option C. Ignore the offer and continue with the contract negotiations, assuming the supplier's intentions are benign. Option D. Immediately report the offer and the circumstances to the Frasers Group Compliance Department for investigation and guidance. The correct answer is D. Immediately report the offer and the circumstances to the Frasers Group Compliance Department for investigation and guidance. Explanation. This scenario presents a professional challenge because it requires an individual at Frasers Group to balance the immediate financial pressures of a supplier relationship with the long-term ethical and regulatory obligations concerning anti-bribery and corruption. Temptation to overlook a minor infraction for the sake of maintaining a valuable business relationship is significant, but doing so could expose Frasers Group to severe legal penalties, reputational damage, and a breakdown of trust with stakeholders. Careful judgment is required to ensure that all business dealings adhere strictly to the company's code of conduct and relevant legislation. The correct approach involves a proactive and transparent reporting mechanism. This approach aligns with the principles of good corporate governance and the UK Bribery Act 2010. Specifically, it upholds the duty to prevent bribery and to act with integrity. By immediately reporting the suspected bribe, the individual ensures that Frasers Group can conduct a thorough internal investigation, take appropriate remedial action, and fulfill its legal obligations to report potential offenses. This demonstrates a commitment to ethical conduct and risk management, safeguarding the company's reputation and legal standing. An incorrect approach that involves accepting the gift without question and proceeding with the contract would be a direct violation of the UK Bribery Act 2010. This act places a strict liability on commercial organizations for failing to prevent bribery, and accepting a gift that could be construed as an inducement or reward for favorable treatment constitutes a serious breach. Another incorrect approach, that of discreetly returning the gift without reporting it, fails to address the underlying issue. While it might seem like a way to avoid confrontation, it does not prevent future occurrences and leaves Frasers Group vulnerable if the supplier continues to engage in such practices, or if the initial intent of the gift was more sinister. This approach neglects the company's responsibility to maintain a robust anti-bribery culture and to investigate potential misconduct. A third incorrect approach, which is to ignore the situation and hope it does not escalate, is negligent and irresponsible. It demonstrates a lack of due diligence and a failure to uphold ethical standards, potentially exposing Frasers Group to significant legal and financial repercussions. Professionals at Frasers Group should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance. This framework should include 1. Recognizing potential ethical or legal red flags. 2. Consulting the company's internal policies and procedures, particularly those related to anti-bribery and corruption. 3. Seeking guidance from the legal or compliance department. 4. Reporting any suspected breaches through the designated channels, even if the infraction appears minor. 5. Documenting all actions taken and decisions made. This systematic approach ensures that all potential issues are addressed appropriately, minimizing risk and upholding the integrity of Frasers Group. Question 16. Implementation of a new supplier relationship for Frasers Group has been proposed by a senior manager who has a close personal relationship with the owner of the potential supplier. The senior manager has not disclosed this relationship and is pushing for a swift decision. What is the most appropriate course of action for an employee who becomes aware of this potential conflict of interest? Option A. Discreetly gather more information about the supplier and the senior manager's relationship before deciding whether to report it. Option B. Discuss the situation informally with the senior manager to understand their perspective before taking any further action. Option C. Proceed with the supplier evaluation as normal, assuming the senior manager's recommendation is based on merit and the relationship is irrelevant. Option D. Immediately report the potential conflict of interest to the Frasers Group's compliance department or designated ethics officer, providing all known details. The correct answer is D. Immediately report the potential conflict of interest to the Frasers Group's compliance department or designated ethics officer, providing all known details. Explanation. This scenario presents a professional challenge for a Frasers Group employee due to the inherent conflict between a potential business opportunity and the company's ethical obligations and regulatory compliance. The need for careful judgment arises from the potential for reputational damage, legal repercussions, and a breach of trust if the situation is not handled appropriately. The employee must navigate the complexities of corporate governance and ethical conduct within the Frasers Group framework. The correct approach involves a proactive and transparent reporting mechanism. This aligns with the Frasers Group's commitment to integrity and compliance, which would be underpinned by internal policies and potentially broader UK regulatory expectations regarding corporate conduct and whistleblowing. By immediately escalating the matter through the designated channels, the employee demonstrates adherence to established procedures designed to address potential conflicts of interest and unethical behavior. This ensures that the situation is reviewed by the appropriate internal stakeholders, who can then make an informed decision based on company policy and legal advice, safeguarding both the company and the employee. An incorrect approach of directly pursuing the opportunity without disclosure would be a significant regulatory and ethical failure. It bypasses established internal controls and could lead to a breach of Frasers Group's code of conduct, potentially exposing the company to legal challenges and financial penalties. Furthermore, it demonstrates a lack of integrity and a disregard for the company's ethical framework. Another incorrect approach of seeking informal advice from a colleague outside of the formal reporting structure is also professionally unacceptable. While well-intentioned, it risks spreading incomplete or potentially misleading information and does not provide the necessary oversight or documentation. This informal route bypasses the established governance mechanisms designed to ensure proper handling of such sensitive matters and could inadvertently create further complications or breaches of confidentiality. The professional decision-making process for similar situations should involve a clear understanding of Frasers Group's internal policies on conflicts of interest, ethical conduct, and reporting procedures. When faced with a potential ethical dilemma or conflict, professionals should first identify the relevant internal policies and external regulatory requirements. They should then follow the prescribed reporting channels, seeking clarification from their line manager or the designated compliance department. Transparency, integrity, and adherence to established procedures are paramount in ensuring responsible corporate behavior and mitigating risks. Question 17. Compliance review shows that Frasers Group is in the final stages of a significant acquisition. The deal is highly confidential and, if successful, is expected to substantially impact the company's share price. A key executive is pushing to finalize the transaction by the end of the week, citing urgent business needs. However, there are concerns that some individuals involved in the deal may possess non-public, price-sensitive information. Which of the following approaches best ensures compliance with UK financial regulations and ethical standards for Frasers Group? Option A. Halt the transaction and conduct a comprehensive internal review of all communications and documentation related to the acquisition to confirm the absence of inside information, and consult Frasers Group's compliance department and relevant UK regulations. Option B. Seek external legal counsel to expedite the transaction, focusing on the legalities of the deal structure rather than the potential for insider trading. Option C. Inform all employees involved in the transaction that they must not trade Frasers Group shares for the next month, without conducting a specific review of the information they possess. Option D. Proceed with the transaction immediately, relying on the executive's assurance that no insider information is being misused to meet the urgent deadline. The correct answer is D. Proceed with the transaction immediately, relying on the executive's assurance that no insider information is being misused to meet the urgent deadline. Explanation. This scenario presents a professional challenge because it requires balancing the company's operational needs with strict adherence to regulatory requirements, specifically concerning insider trading. The pressure to complete a transaction quickly can lead to overlooking crucial compliance steps. Careful judgment is essential to avoid severe legal and reputational consequences. The correct approach involves a thorough review of Frasers Group's internal policies and relevant UK financial regulations, such as those set out by the Financial Conduct Authority, FCA, and the UK Market Abuse Regulation, MAR. This approach is correct because it prioritizes compliance by ensuring that no non-public, price-sensitive information is being improperly disclosed or acted upon. It aligns with the ethical duty to maintain market integrity and prevent insider dealing, which is a criminal offence under the UK's Financial Services and Markets Act 2000, FSMA, and MAR. An incorrect approach that proceeds without confirming the absence of inside information would be professionally unacceptable. This failure would directly contravene the FCA's principles for businesses, particularly Principle 1, integrity, and Principle 2, skill, care, and diligence, and would also breach MAR provisions on insider dealing and unlawful disclosure of inside information. Another incorrect approach, which involves seeking external legal advice solely to expedite the transaction rather than to ensure compliance, is also professionally flawed. While legal advice is important, its primary purpose in this context must be to confirm regulatory adherence, not to find loopholes or shortcuts that bypass compliance. This approach risks misinterpreting the role of legal counsel as a facilitator of speed over substance, potentially leading to a breach of regulatory obligations. A third incorrect approach, which relies on the personal assurance of a senior manager that no inside information is involved, is highly problematic. Personal assurances, while sometimes given in good faith, do not constitute a robust compliance check. Regulatory frameworks demand documented evidence and formal processes to mitigate the risk of insider trading. Relying solely on verbal assurances ignores the systematic controls required by the FCA and MAR to prevent market abuse. Professionals should employ a decision-making framework that begins with identifying potential regulatory risks. This involves understanding the nature of the information being handled and its potential impact on Frasers Group's share price. The next step is to consult relevant internal policies and external regulations. If there is any doubt about the presence of inside information or the legality of proposed actions, the process must pause. This pause allows for thorough due diligence, including seeking appropriate compliance or legal advice specifically focused on regulatory adherence. The ultimate decision should be guided by the principle of when in doubt, don't proceed until full compliance is confirmed. Question 18. During the evaluation of a potential new supplier for Frasers Group, a candidate is presented with a proposal that offers significantly lower costs, but involves a supplier with a history of minor regulatory noncompliance in a different sector. The candidate is also aware that the supplier's owner has a personal relationship with a senior manager within Frasers Group's procurement department, which approach best demonstrates sound professional judgment and adherence to Frasers Group's ethical and regulatory standards. Option A. Proceed with the supplier due to the substantial cost savings, assuming the past noncompliance is not relevant and the personal relationship is a private matter. Option B. Conduct thorough due diligence, including an independent assessment of the supplier's current compliance record, the nature of their past noncompliance, and the potential impact of the personal relationship on procurement decisions, while seeking guidance from Frasers Group's compliance and legal departments. Option C. Immediately reject the supplier due to the potential for reputational damage and the appearance of a conflict of interest, without further investigation. Option D. Inform the senior manager about the potential conflict of interest and ask them to approve the supplier based on their knowledge of the individual, prioritizing the cost savings. The correct answer is A. Proceed with the supplier due to the substantial cost savings, assuming the past noncompliance is not relevant and the personal relationship is a private matter. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires balancing the company's immediate financial interests with its long-term ethical obligations and regulatory compliance. The pressure to achieve short-term gains can create a temptation to overlook or downplay potential risks, especially when those risks are not immediately apparent or quantifiable. A candidate's ability to navigate this tension, prioritizing integrity and compliance over expediency, is crucial for a role at Frasers Group. The challenge lies in identifying and acting upon potential conflicts of interest and ensuring that all decisions align with the company's stated values and the relevant regulatory framework. Correct approach analysis. The correct approach involves a proactive and thorough due diligence process, specifically focusing on identifying and mitigating potential conflicts of interest and ensuring compliance with all applicable regulations. This means not only reviewing the financial projections, but also scrutinizing the underlying assumptions, the reputation of the counterparty, and any potential ethical red flags. A key aspect is seeking independent legal and compliance advice when uncertainties arise, demonstrating a commitment to robust governance and risk management. This aligns with the principles of responsible business conduct and regulatory expectations for due diligence, ensuring that Frasers Group operates with integrity and avoids reputational damage or legal repercussions. Incorrect approach is analysis, focusing solely on the projected financial returns without adequately assessing the associated risks or potential conflicts of interest, is an ethically and regulatorily unsound approach. This overlooks the fundamental principle of responsible investment and due diligence, potentially exposing Frasers Group to significant financial, legal, and reputational harm. It suggests a short-sighted perspective that prioritizes immediate profit over sustainable and ethical business practices. Accepting the proposal based on the counterparty's assurances without independent verification or seeking expert advice is also problematic. This demonstrates a lack of professional skepticism and a failure to adhere to best practices in risk assessment. It relies on trust without establishing mechanisms to ensure that trust is well placed, which is a significant regulatory and ethical failing. Ignoring potential ethical concerns because they are not explicitly prohibited by current regulations is a dangerous approach. Ethical considerations often precede formal regulation, and a responsible organization should operate with a higher standard of conduct. This approach suggests a willingness to operate in a gray area, which can lead to reputational damage and future regulatory scrutiny. Professional reasoning. Professionals should employ a structured decision-making framework that prioritizes ethical considerations and regulatory compliance alongside financial objectives. This framework should include 1. Information gathering. Collect all relevant information, including financial data, counterparty background, and market conditions. 2. Risk assessment. Identify and evaluate potential financial, legal, ethical, and reputational risks associated with the decision. 3. Compliance check. Ensure the proposed action aligns with all applicable laws, regulations, and internal policies. 4. Ethical evaluation. Consider the ethical implications of the decision, even if not explicitly regulated. 5. Seeking expert advice. Consult with legal, compliance, or other relevant experts when facing complex or uncertain situations. 6. Documentation. Maintain clear records of the decision-making process and the rationale behind the final choice. 7. Escalation. If significant risks or ethical concerns are identified, escalate the matter to senior management or the appropriate governance body. Question 19. Compliance review shows that a department within Frasers Group requires access to specific client contact details held by another department to resolve a critical customer service issue. The requesting department head is aware of the urgency and is considering bypassing the standard data access request procedure to obtain the information immediately. What is the most appropriate course of action for the requesting department head? Option A. Directly contact the department holding the data and request the information verbally, explaining the urgency of the customer service issue. Option B. Inform the customer service team that the information cannot be provided due to data protection regulations, even if it means the issue remains unresolved. Option C. Submit a formal, documented request through the established internal data access channels, clearly stating the specific data required and the legitimate business purpose for its use, while acknowledging the urgency. Option D. Access the client database directly and retrieve the necessary contact details, assuming the urgency justifies the action. The correct answer is C. Submit a formal, documented request through the established internal data access channels, clearly stating the specific data required and the legitimate business purpose for its use, while acknowledging the urgency. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need for information with the strict regulatory requirements governing data handling and client confidentiality. Frasers Group, like any regulated entity, must ensure that all data access is lawful, proportionate, and adheres to the principles of data protection. The difficulty lies in obtaining necessary information without inadvertently breaching privacy laws or internal policies designed to protect sensitive client data. Careful judgment is required to navigate this tension. The correct approach involves a formal, documented request through established internal channels that are compliant with data protection regulations. This ensures that the request is reviewed for legitimacy, necessity, and proportionality. It also provides an audit trail, demonstrating adherence to regulatory frameworks such as the UK GDPR. This method upholds the principles of data minimization and purpose limitation, ensuring that only the necessary data is accessed for a legitimate business purpose, thereby protecting client confidentiality and avoiding regulatory breaches. An incorrect approach that involves direct, informal access to client data without proper authorization or justification would constitute a significant regulatory and ethical failure. This bypasses the established controls designed to protect sensitive information, potentially leading to unauthorized disclosure, misuse of data, and breaches of the UK GDPR. Such an action would demonstrate a disregard for data protection principles and could result in severe penalties for both the individual and Frasers Group. Another incorrect approach, which is to refuse to provide any information even when a legitimate business need exists, would also be professionally unsound. While caution is necessary, an absolute refusal without exploring compliant avenues for data sharing can hinder essential business operations and risk non-compliance with internal policies or regulatory obligations that may necessitate data access under specific conditions. This demonstrates a lack of understanding of the balance required between data protection and operational necessity. The professional decision-making process for similar situations should involve a clear understanding of the relevant regulatory framework, e.g., UK GDPR, Data Protection Act 2018, Frasers Group's internal data handling policies, and the principles of data ethics. When faced with a need for information, professionals should first identify the specific data required and the legitimate business purpose for accessing it. They should then consult internal policies and procedures for the correct protocol for requesting such data. If unsure, seeking guidance from the data protection officer or legal counsel is paramount. The decision should always prioritize lawful and ethical data handling, ensuring that any access is necessary, proportionate, and adequately documented. Question 20. Performance analysis shows a significant correlation between employee performance metrics at Frasers Group and potential customer engagement patterns. Management is considering leveraging this anonymized performance data to refine marketing strategies for new product launches. Which of the following represents the most appropriate and legally compliant approach for Frasers Group to consider? Option A. Proceed with using the anonymized performance data to inform marketing strategies, as the data is anonymized and therefore no longer personal data. Option B. Conduct a thorough review of Frasers Group's internal data protection policies and consult with legal counsel to ensure compliance with the Data Protection Act 2018 and UK GDPR before utilizing any employee performance data for marketing purposes, even if anonymized. Option C. Immediately cease all collection and analysis of employee performance data to avoid any potential data protection risks. Option D. Use the anonymized performance data for marketing strategies, assuming that employee consent for general data usage covers this specific application. The correct answer is A. Proceed with using the anonymized performance data to inform marketing strategies, as the data is anonymized and therefore no longer personal data. Explanation. This scenario presents a professional challenge because it requires balancing the immediate financial pressures of a company like Frasers Group with the long-term ethical and regulatory obligations concerning employee welfare and data privacy. The decision-maker must navigate potential conflicts between business objectives and legal compliance, particularly when dealing with sensitive employee information. Careful judgment is required to ensure that any action taken is both commercially sound and legally defensible, avoiding reputational damage and potential penalties. The correct approach involves a thorough review of Frasers Group's internal policies and relevant UK data protection legislation, specifically the Data Protection Act 2018, DPA 2018, and the UK GDPR. This approach prioritizes understanding the legal framework governing the handling of employee data, including consent, legitimate interest, and the purpose limitation principle. It ensures that any decision regarding the use of employee performance data for marketing purposes is compliant with these regulations, safeguarding employee privacy and maintaining trust. This aligns with the ethical duty to treat employees fairly and transparently, and the regulatory requirement to process personal data lawfully and ethically. An incorrect approach that focuses solely on the potential marketing benefits without considering the legal implications would fail to comply with the DPA 2018 and UK GDPR. This could lead to a breach of data protection principles, resulting in significant fines, legal action, and damage to Frasers Group's reputation. Another incorrect approach that involves immediate implementation without proper consultation or risk assessment would also be problematic. This bypasses essential due diligence, potentially overlooking critical privacy concerns or employee rights, and could be seen as a disregard for regulatory obligations and ethical employee treatment. A third incorrect approach that involves discarding the data entirely without exploring compliant uses might be overly cautious and miss legitimate business opportunities, but it would avoid regulatory breaches. However, the most professionally sound approach is to find a compliant path forward. Professionals should employ a decision-making framework that begins with identifying the core issue and the relevant regulatory landscape. This is followed by an assessment of potential options against legal requirements, ethical considerations, and business objectives. A risk assessment for each option is crucial, followed by consultation with legal and compliance teams where necessary. The final decision should be documented, with clear justification based on the comprehensive evaluation.